The ATO simply don't care how complex your crypto taxes are. This is one of the big learnings I'm getting out of recent discussions with other accountants and the ATO themselves. They just simply don't care and they want you to get it right. Well, that's what I'm going to explain to you today, how you can actually make sure you get these things right. Hello everyone, my name is Ethan Rooshock and I'm back talking about crypto taxes again. I went to a crypto tax conference last week and got to speak to some other accountants, some tax lawyers, and listen to people from a range of different industries that are all connected to this crypto tax space, and there's definitely some interesting learnings I took from it. The biggest thing is that ATO don't care how complex your crypto taxes are. I keep getting a lot of people contacting me saying, oh, I'm really struggling with this. This is silly. Why do we have to get this up to date? Oh, can I just do this or can I do that? And the answer is no, you need to get it right. You're the one that has chosen to invest. We have a self-assessment system here in Australia, which means that you need to collate your own tax records. The onus is on you. And therefore the ATO simply, they don't care if it's complex. There's definitely a lot of issues about why it's complex because of every trade being a taxing event. But the ATO are going to go to you, well, you need to get this right. If we do an audit, we want to see an audit trail of how you got to your final capital gains figures. Or that includes even if it's a loss. So a lot of the comments I'm getting are, well, I've made a loss anyway. I don't need to include anything. Or why do I have to work this out? I barely made any money. But the reality is you have to, if you get an audit done, the ATO are going to go, well, what's the actual figure? Not just a made up figure. And the issue is if you just make something up or don't include anything at all, you're more likely to get an audit. The ATO know that you've invested in crypto. There's likely going to be a flag on your return if you're doing it yourself or you're going through an agent to go, you've dealt with crypto, we're expecting to see something. So if you include nothing at capital gains items, they're likely going to ask the question automatically to go, hey, what's going on? We know you've got this, you've recorded nothing. Have you actually disposed of nothing? And if you have disposed of something, they're going to want to dig deeper and deeper and deeper. So doing nothing isn't really a solution at all. So now we've ruled out doing nothing because clearly that isn't a very viable solution in the long term. What are the solutions you got? And I think it really comes down to two options. You either learn how it works yourself, learn it in depth, how does the tax work on it, etc. How am I going to track this? Is it via some kind of software? How does that software work, etc. Or are you going to outsource a whole lot and pay someone to do it? I'll go through both of those options, kind of with the pros and cons of both. So learning yourself is probably the best option that I'd recommend people at a basic level. That doesn't mean you need to do your own tax return or need to understand all the tax laws to the finest extent. But if you can learn the reconciliation of a software, it's going to save you a lot of money in the long run. But it is going to take you time. You need to understand that. We've got options out there such as Crypto Tax Calculator. Go and check out the full review I've done on them, where you can import things from your exchanges, from your wallets, and then you got to go through that reconciliation process. So to be able to do this, you want to have a good idea of what's taxable, what's not taxable. The software will guide you without giving you tax advice. But the reconciliation can take time. No software is perfect. And the issue is when you're doing complex things, you're going to likely need to manually categorize different transactions. So you're going to need to understand how that works to be able to reconcile it. The reconciliation process can take time though. Like it can take 10, 15, 20 hours depending on how many transactions you've got and how complex your dealings are. So don't expect this to be a 5-minute thing if you've done 5,000 transactions. And this is something you need to understand when you're making any decisions is how am I actually going to track this? Now, once you've reconciled stuff from your software, you may be able to then either do your own return if you feel comfortable with that, or you'll be able to give that report to an accountant. They may check over it. That's something I do. I go through, okay, have I noticed anything was a missing cost base? Are there any warnings coming up? Do the overall figure will sound right when I actually explain what they mean to the client? And then you can get your return done. The other option is you may want to outsource the whole lot. You may want to go, you know what? I don't know how to do this. Here we go. Go to your accountant and say, can you reconcile this for me? Just be understanding that one, it's hard to find an accountant that specializes in this area. And if you're talking about software reconciliation, you really want someone that's worked with it before. And you want to understand that it's likely going to cost you quite a bit of money if you've got complex dealings. Because if it's going to take 15 or 20 hours, they're likely going to be charging you at an hourly rate and you're going to be suddenly talking potentially thousands of dollars. And that's something you're going to have to understand that is going to be costly, and you may be paying even a premium because you may be paying for a bit of expertise knowledge. So simply knowing that the ATO doesn't care probably gives you a good idea that before you actually decide to go and invest in crypto, you need to understand, are you actually willing to go and track all of this and understand how the tax works? Because if you started a business, you'd know, oh, I need to speak to an accountant, or I need to have a software to track my income and expenses. And going into investment should be the same thing. You should be going, how does this work from a tax point of view, and how am I going to track that? And there's definitely some projects that have got a lot of unknowns about tax, and you may actually want to go, oh, I don't want to get involved in that at the moment. It's going to cause a tax nightmare. I don't understand how it's taxed, or it's going to be a really onerous process to actually get the record keeping right. And maybe you want to stay clear of that. It's definitely something you should probably be considering before you make an investment is, are you actually going to be able to track this, and are you going to comply with laws? I think it's just something to understand that the ATO don't care across anything, how complex. It's a self-assessment system. You need to get it right. It's not on anyone else. It's not on the ATO. It's not on your accountant. It's not on anyone else. It's on you. You're the taxpayer. It's your tax dealings. You've made the decision to make those investments. And unfortunately, it's all going to fall back on you. If an audit's done, the ATO are going to come after you for the tax owing, not someone else. So understand that before you go and make any decision. I hope that video has been helpful. What do you want me to cover next? Drop a comment down below, and I appreciate you for watching. I'll talk to you again on the next video.